folks, Dan Frio here with your real estate update for October 12th, 2023. So we're seeing your interest rates easing, and is it going to continue through today? Well, that's what we're going to talk about based on the economic data. But what I want to explain to you guys too on this sheet, look at the 30-year fixed up there at the 7.6% rate. Now look at the 30-year fixed on the FHA, which is 7.08. It's a half a point lower. So if you're out there and you're thinking, okay, FHA is for bad customers, there's a bunch of fees, it takes way too long to close on the loan. Let me debunk a lot of those things for you. If I was in the market right now getting a loan and I wasn't putting down 20%, I'd go with an FHA loan. Why? The rate's a 0.5% lower. Okay, so does it take longer to close on the loan? Nope. Is it scrutinize your data a little bit more than just a normal mortgage? No, actually FHA guidelines are much looser. I said much looser than conventional guidelines. The only thing that's really a difference is when they do the appraisal on the home, they do a little more detailed on it to make sure, like, it's basically to cover your butt if you're looking to buy that house. So that's all I got to say about FHAs right now. So without further ado, let's get over to the economic news that we have for today that's shaping the market. So you see on the top the headline, stocks are a little changed as traders weigh latest U.S. consumer inflationary reports. So today we had the consumer inflation numbers and they came out, and then depending on what you read here, did they come in higher than expected or in line? Well, you see right through here, consumer prices rose in September more than expected, but then you see down here the 10-year Treasury yield is flat after core inflation readings is in line. So is it more than expected or is it in line? Well, let's figure it out. So what we want to do is go over to the economic calendar, and here's the news we have for today. So yesterday we had the inflationary numbers on the producer side. That's called the PPI, and it was lower than the previous reading. The last reading we had was up 0.7. It actually eased all the way down to 0.5. So now let's scroll into the data that we have today. You see three readings here, and these all say CPI, but they're a little bit different. First, you see core CPI, month over month. Then you see CPI year over year, and then you see CPI month over month. Okay, so let's start focusing in on the bottom first, and then we'll work our way up. The CPI numbers from August to September, the last reading we had, it was those inflationary numbers were up 0.6. Economists thought it was going to go down to 0.3, mainly because of energy. Well, it only went down 0.4, okay? But it's a nice move from up 0.6 to now down only up 0.4. The readings on this is why I thought this was maybe going to be in line with the 0.6. We only saw energy starting to reduce at the end of September. And now we had energy prices or oil prices go from almost $100 a barrel to about $85 a barrel where we are today. That's about a 12% reduction in that cost. So the next reading, if everything else stays flat, you're going to start seeing the CPI numbers starting to come in line really nicely. Okay, year over year, we were at 3.7 and we're staying sticky at 3.7, and that oil number is really killing these numbers. But when you strip out the food and energy, that's the core CPI. What they do is they pull out those energy costs for the fluctuation in oil. The last reading was 0.3. They were expecting 0.3, came in right in line. Right in line. So this is where the numbers are right now. So based on this information, what's the markets doing? So what we do is we float over to the mortgage-backed securities market, and this is basically giving me a guide on what's going on with mortgage rates, okay? So what do I want you to understand on this page is over here, what you're seeing is what's happening to the price of a mortgage-backed security. What I need you to know or understand is as the price up there goes down, what you're seeing today, rates are going to go up. Okay, so we're going to see rates go up maybe about 0.1, between 0.05 and 0.1. Nothing really dramatic. But look at the chart that we've had in the past week. This is the last 5 days. We went from basically 94 that you're seeing on your screen right now in the close up to 96. Remember I said if the prices go up, well, in this case, when the prices went down, rates go up. When the prices go up, rates come down. So we've had nice easing in mortgage rates based in the last 5 days on what the MBSs are doing right now. So now I want to look at, based on this information, what's the Federal Reserve expected to do at the next meeting? So we go over to the Federal Reserve watch tank, and this is the CME Fed Watch tool. What this website tells us is what the expectations are of what the Federal Reserve is going to do at the next meeting. So you can just go to cmegroup.com and you can find this. The Federal Reserve meets in 20 days. So what this is it's what is the likelihood that the Federal Reserve will change the federal target rate at the next FOMC meeting? Well, right now, Remember, everybody keeps saying they're going to raise rates. They're going to raise rates. Well, right now, there is almost a 90% chance that they are not going to raise rates. Okay, the reason being is the federal funds rate right now is the thing that the Federal Reserve controls. It is at 5.25 to 5.5, and you can see they're looking to stick right there, 5.25 to 5.5. 90% probability that it's going to stay there. So no expectations that the Federal Reserve is going to move rates anytime soon. And if you really go into this chart down through here, the probabilities of what they're going to do, you go through here, and let me get my head out of the way real quick. This is the probabilities of what they're going to do at the next few meetings. So they have a meeting on November 1st, 90% probability that they're not going to move rates. And you can see that all through the rest of the year in the blue signals. And then June of next year, even the Federal Reserve is expected to pivot and start to reduce rates. So if you're out there and you're like, Dan, how can you help me with all this stuff? Especially if you locked in a rate recently. If you locked in a rate last week or 2 weeks ago, you probably have a reprieve in rates. So are you stuck? Well, if you're at a bank, yes, you're stuck. If you're at a credit union, yes, you're stuck. But how can we help you? Well, we have a tool that we added not too long ago. It's called the loan estimate. So what happens is when you apply for a loan, the company that you go through is going to do all the paperwork and then send you what they call the loan estimate. That's going to give you the address of the house. It's going to give you the purchase price of the house, and it's going to give you the loan amount and then the rate and the fees and all the other stuff. So if you're locked in, you're stuck. So what can we do? How can I help you? Well, send me that loan estimate. I'm a mortgage advisor licensed in all 50 states, and I'm also one of the country's largest mortgage brokerages. So I have the opportunity to use about 72 different lenders out there. So what we can do is we can scan your scenario with up to 72 of the country's largest lenders and banks and credit unions to see, is there a better rate out there since you locked in at that high rate? And then we're going to get back with you. I do a customized letter, get right back to you, or a customized video going over what you've been proposed and what we can do for you. So go ahead in there and upload your loan estimate in there. But if you're out there and you're like, Dan, okay, I'm really sick and tired of renting. I would love to buy a house right now because in my area, prices keep going up and up and up. They aren't crashing like everybody was telling me to. Well, I wasn't one of those ones telling you to. But in that case, please, all I ask you to do is don't disqualify yourself. What I need you to do is one of three things. One, you could click the Apply Now button. What it's going to do is ask you a series of questions, and then it's going to set you up with an appointment with the specialist on my team that's relevant to what you're looking for. Are you looking to buy a single-family home, a condo, a duplex, a 4-unit building? Then it's going to route you to the specialist on my team to get back with you and go through your situation to see if we can get you pre-qualified. But if you're out there and you're like, Dan, can I call? Can I email you? Yeah, you can do that. You can do both of those. Scroll down to the bottom of my website. There's all kind of calculations and everything in here. And you're going to see right through here, we got an 800 number. That number is 844-775-5626. Or if you want to email me directly, please do. And I'm the one that responds. And many times I respond by video, so you know it's me. You can email me at dan@therateupdate.com. Thank you so much for watching, guys. God bless. And if you haven't yet subscribed, please do so right down below. Take care. I'll see you tomorrow. Bye-bye.